Okay, Aradel Holdings, their Q1 result is out. So if you're watching, we do this once we break down results of all the companies. You get it in real time on our YouTube channel, on our X page. So that's why you follow us on X. Then when we make out time, because we don't just do headline analysis, we do in-depth so that you understand what's going on. So that's why you should follow us X. But if you look at this analysis, it has been out since the 2nd of August. So you can get it in real time because, editing, recording, and stuff like that on YouTube takes a lot of time. So let's see what's happened with Aradel. You can see that revenue jumped over 577%. Operating margin expanded. Profit before tax grew. But all these things are not organic now. Revenue but not do like 5x. There is a reason behind it. There's consolidation and stuff like that. Acquisition of ND Western and the Renaissance. So those things added to the poop. So it won't be a fair comparison comparing H126 with H125 because it was a different structure. So let's dive in. Like we normally do, the analysis we have on X, we divide it into 4 sections. We have these catchy headlines. Then we have what happened, that's what happened, the report and stuff like that. The next thing is what we found out when we digged in. The next thing is the evidence backing what we find out, and finally what to watch going forward. So you can make out time and read it. So let's ask some of the things they kind of summarize, make this video 5-6 minutes so that you can run along with it. Then for the graphics, this is the price chart. For some of you, I know you are pretty new, you don't understand. This is what price looks like from a chart point of view. This is the income statement which we downloaded, script it out, clean it very well. This is the income statement. Then this is the balance sheet, and then this is the cash flow. So we start with the graphics. So let's go to the income statement. So this is the first thing. This is what the price of Aradel has looked like from the day it was listed to date. You can see where price started. So look at your right hand side. You see prices. For those of you who don't know how to read the charts, there is no problem. But this is what a price chart looks like. So you see where prices started. You see the year below 2025. It was trading below 600, toppled up. Then you can see the highs. The highest it has traded over 2,000. Then it dropped to close to 1,002 something. Then it went up. So this is currently where price is 1,526 naira. So that is the price performance of Aradel over time. So the next thing is let's look at the income statement. Okay, so this is Aradel's income statement, H1 2026 and H1 2025 when comparing the two. So you can see what we told you. So in revenue, they did over 2.4 trillion. So you cannot compare it with last year when it was 380. So that's why you're having that 500. So it's not a fair comparison, to be honest. So what we do is this, because it's not a bigger business. So what we do is just tell us what happened. We have revenue growing. We have the gross margin side of things, gross profit growing too. So it's not really a fair comparison, but put your eye on this headline, this tax expenses. So they booked a profit after all the deduction. They booked a profit of over 752 billion, and they paid tax of over 500 something billion. Now they were pocketing home, or the bottom line, they were going home with this amount. This is what got everybody's attention. We are going to explain, but just bear in mind that tax, the kind of tax that is being paid in oil and gas, drilling, exploring, is way bigger than your conventional corporate income tax of 30 something percent. This tax is sit over 60 something, 70 something. Sometimes people call it punitive nature, like punishment, whatever, but that is how unique it is. So you can make all the money, but it goes down to tax. So let's look at the margins too. So if you compare net, the margins, you are growing up, but the net margin somehow dropped compared to when the business was smaller. So this is where the eyeballs started popping up. Then the coverage ratio too. The coverage somehow, which was, they didn't have so much debt at a time, interest to pay, but since they had more now, so that is why the coverage ratio flipped red, and then tax of course jumped because the business was not full exploring and stuff like that. But immediately the ND Western business, gas business went into their book and the Renaissance, so their tax jumped from what it was before 23% to now 7 something. So then you see the earnings though, the earnings per share actually increase. So this is the margin side. So it's not an eye for an eye comparison. When the real comparison will come is in 24, when you now start doing a better eye and eye comparison. So let's look at the balance sheet too. So the balance sheet now is the asset is sitting over 10 trillion now. So it's not still an eye and an eye for an eye, but it's very close because the last book we had was December 25 too. So you look at assets growing, the equity side of the business too. You look at the equity side of the things, you see that the equity is also growing. So it's not really a fair comparison, but somehow the current ratio actually shows how liquid the business is and stuff like that. To meet up their short-term obligation is dropping a little bit because of the debt that came from the acquisition. Then if you look at the return on assets, even though it's not annualized, you're still ticking up a little bit. Return on equity ticking up a little bit, and then current borrowing and stuff like that. So it's still not really an eye for an eye. So let's look at the cash flow to see what the cash flow looks like before we now give you facts behind the numbers. So for the cash flow, so the cash flow grew, which is not still an eye for an eye. So cash flow now grew from 92.6 billion in 25 now to 676.6 billion in 26. Bigger business, that is where it's all pointing at. So some backing stuff. So from the revenue they booked already, so this revenue is actually operational, especially specifically coming from the ND Western. You know, it's two acquisition, ND Western. If you haven't read about these things, go and read in our previous analysis, both their 2025 full year, we talked about it. Q1 2026, we talked about it. So like we normally say, if you want to search out for our research, just go to, we made a post about it, go to X. Once you get to X, you go to our page, look at top left, you see the search button, type any company, provided we have covered it. You see the video, you see the earnings, you see the there is this product line we have also, which we call the earnings insight, a research insight. You can see it, you write it in numbers, research insights 1 2 3, so you can see these things and make, because it goes beyond the things you see on the headline. So that is number one. Then on the segment side of things, the business has 3 major segments now: crude oil, then gas with refined products, that's their refinery, which is still small. But the crude, which is now bigger part, which, because ND Western, their crude book went into Aradel, so crude now jumped from what it used to be now to over 1.9 trillion. That is how so crude contributed majority of the revenue you are seeing. Then gas also jumped somehow from 18 billion to now 427 billion. Then refined product, which was their original product line that has not been swatted, still increased marginally without any swatting. It moved from 116 billion to 125 billion in revenue. So that is their pre-existing business model, which hasn't changed, their refinery. Then geographically, of course, they export, so outside Nigeria too. So the bulk of the revenue came from crude oil exports, which is now around 1.9 trillion. So while the crude sold locally, it dwarfed to just 553 billion compared to 1.9 trillion. So the comparison is, you look at it, it's very big. 78 as against 22%. Then another thing is that tax. So the tax regime, this is not the new normal. It's not a one-off thing. So the taxes are usually punitive. Forgive us for the language, but that's what people say. It's punitive in nature. So expecting a tax from 60% upwards for this kind of business. Then another thing that happened is that, last quarter, they had what we call overlifts. That you taking more than you should when they are distributing their allocation. But in the next year, they repaid for it now by having an underlift. So we don't want to make this too long, but we have wrote about it, we have talked about it. So this is also the recurring nature of this kind of way. Sometimes you have an overlift, you have an underlift. Then the last one is the litigation case of the Obele litigation case is still on, so there is a probability that it might come to limelight, and the provision made for it is now sitting around, that litigation case is now sitting around 727.4 billion. So that is it about Aradel. Read up more here. Everything you need is here. You just need to make out time. Don't chase earnings. Read and know what is happening. So you read more from here. Hold on a sec. So you read more from here and see what to watch out for going forward. So see you on the next one. We don't make it long. We'll make it short.